And we got Ash Crypto over on X with a quick synopsis. Too long, didn't read. FOMC minutes are out. Fed thinks that inflation risks are definitely higher than the unemployment risk right now. And it also thinks tariffs impact could take some time. So as you know, a lot of the Federal Reserve members think that the tariffs are going to destroy us as far as inflation long term. They're not seeing it as impactful so early as they thought, but they are projecting in the future that it may still impact us. This is not bullish language from them. So as we all know, a lot of people were hoping that potentially this September there'd be a rate cut, but there's now talks that tomorrow, Friday, there may be a rate cut. He goes on to say, let's wait for Friday's speech for more clarity. And that leads me back over to X.com and a huge report. Speaking of Binance, Binance today reaches a new all-time high of over $880. This is just out of the blue. I wasn't even tracking BNB for quite some time. This is massive. They are making huge moves in the crypto space. As you saw in the beginning of the video, Eric Trump was speaking at the Wyoming Blockchain Summit, says that he spends over 50% of my time in the crypto. Let me know down in the comments section. I definitely spend 50% of my time in crypto as well. Do you have something else going on in your life that's more important? I hope you do, because if you're a crypto degenerate, it can be very stressful. And before we get into the article, I want to let you know Ollie Charts over on X says XRP looks ready to bounce after perfectly timing the top. The signal now says to buy. And this is what he meant by the top, when price did reach up here to these highs as of recently. This is the 9-hour chart that he's working on. It did double top up here, but it did take quite a significant dive to the downside. Now, as you saw in the ETF report, BlackRock, Fidelity, and other ETFs have sold $422 million worth of Ethereum. More than that, actually, after we saw the report. A lot of people are starting to freak out thinking that this bull run is officially over. We got Quentin048.ETH says, so you're telling me that 124,000 was the top, while 0 of the 30 bull market peak indicators flashed. And that is still true. None of these indicators have flashed that we've hit any sort of peak at all. Now, there is a crazy uproar at the Federal Reserve. We do know the Federal Reserve is meeting in Wyoming at the Jackson Hole Symposium. And at the same exact time, Federal Reserve Governor Lisa Cook just got referred to the DOJ for apparently doing mortgage fraud. So lots of mortgage fraud going up with these higher ups, isn't there? And just in $8 trillion, Morgan Stanley says the Federal Reserve will not cut interest rates at all this year. So there's rumors that it's going to be cut tomorrow, or not tomorrow, Friday. There's rumors that it's going to be cut in September. There's bets on the betting market saying September for sure. But Morgan Stanley thinks that it's not going to happen. Coin Bureau also posting his update on the Fed minutes that did come out, says that they supported holding rates steady, and without weak payroll data, a September rate cut might not be. On some positive news for the crypto markets, we do have $1 billion worth of USDT being minted at the USDT Treasury. And as you know, whenever there's USDT minted at the Treasury, Bitcoin go up. Here's another post from Ash Crypto. He's been hot on X today. Wall Street is predicting that a rate cut will be announced at the Jackson Hole Summit on Friday. I don't know about that one. But the Fed Watch Tool odds are now at 83% of a rate cut in September. And it was actually all the way up to 103%. So that is not great. Another Federal Reserve update. Federal Reserve Governor Waller says stablecoins and other cryptocurrencies are part of a payments revolution. Now, there's been a lot of talk about the potential 51% Bitcoin attack. As of recently, the 51% attack against Monero has been coming into play. There hasn't been an actual attack on Monero just yet, but there is a 51% mining overrun being taken on by a company. They now have over 51% of the mining capacity for Monero. A lot of people have been talking about this is very, very close to happening for Bitcoin, because 2 major Bitcoin miners actually run nearly 51% of all the hash power. And then David Schwartz here chimes in on this. He says, you think it's particularly hard for the NSA or the government of China to do a 51% attack on Bitcoin? All it takes is money, and they can short Bitcoin to cover some of those costs. And this was all the way back in April of 2018. And the consequences are radically different. It's not clear how Bitcoin recovers if this happens. You can't just change proof of work algorithm. It's very clear how XRP recovers. You can just change the validators. Coin Bureau also posting Swift to choose Ripple or Hedera. Vanir Assets reports that Swift is working to bridge traditional finance with blockchain, highlighting XRP and HBAR as leading contenders in the global payment space. And bullish news for Bullish and also Ripple. Bullish has arranged to receive $1.15 billion of proceeds from its recently completed IPO, initial public offering, in stablecoins, which represents a historic step in the use of stablecoins in initial public offering in the United States. And Ripple says, congratulations to Bullish on a successful IPO. A portion of the IPO proceeds were settled in RLUSD, minted on the XRP ledger. And this is the first public listing to bring the settlement process on chain and sets a precedent for how stablecoins can shape future listings. So congratulations to Bullish and also Ripple. And speaking of Ripple, let's jump into XRP's potential for a rally. After losing 20% of its value following the July all-time high, the third largest crypto in the world could be on the verge of another potential price revival. The same metric that predicted its downfall now flashes a buy signal, according to Ali Martinez, who said XRP looks ready to bounce. And as we see, and we saw this on X, his indicator on the one signal is a sell signal, meaning it's time for price to potentially be going down. And sure enough, we did have quite the crazy drop, and we'll get into the charts here in a moment. But now his buy signal, the 9, has flashed, and we're looking for a revival in the price of XRP. So Cynthia Loomis still continuing to push the market structure bill for crypto. Loomis said Republicans' goals include having a market structure bill passed through the Senate Banking Committee by the end of September, followed by consideration in the Senate Agriculture Committee by October. She went on to say, I hope it happens before Thanksgiving. And Republicans plan to pass this market structure in the Senate, followed U.S. House Representatives approving the Digital Asset Market Clarity, or the Clarity Rule, which was passed in July, with 78 Democrats voting for the bill as well. So it was a bipartisan issue. Loomis, on other Senate Republicans, suggested their version of the legislation, tentatively titled Responsible Financial Innovation Act, would build on top of the Clarity Act. And if you remember, the Clarity Act was one of 3 legislation pieces passed in the House by the Republicans during July's Crypto Week. In addition to the market structure bill, House approved the Genius Act to regulate payment stablecoins and anti-CBDC Surveillance State Act. Now, this all has passed in the House. Then it goes on to the Senate, where they start to rework the bill a little bit. And that's where we get into our next article, where the banking lobby is losing its mind because it's losing its power, and they want to change the Genius Act. As we can see from this post by Bank Policy Institute, they said, in digital asset market structure legislation, it is important that the requirements in the Genius Act prohibiting the payment of interest and yield on stablecoins are not evaded. And the reason that you should care about this is if banks get more involved, it could mean more trust and liquidity into crypto, but it might also give traditional finance more control. And this could affect how stablecoins work for you, whether you're trading or holding. Plus, with the Genius Act already signed by President Trump, any changes could ripple through the market fast. So keep your eyes peeled for this to go through the Senate. Prominent members in the crypto industry have long argued that stablecoin issuers should be allowed to offer users interest. In March, Coinbase CEO Brian Armstrong said that interest-bearing stablecoins would give users more control over their financial products. The ability for other firms like exchanges to allow interest on stablecoins is based on factors other than holding, use, or retention, which was mentioned in the Genius Bill. The word solely in the Genius Act is a powerful legal limiter and really does mean that if there's any other basis for the deals, they probably don't qualify. The banking industry's concerns may have some grounding, though, said Rosal. The banking lobby's strongest argument is that allowing stablecoin issuers to pay interest risks would create unregulated shadow banks, threatening financial stability and consumer safety. Without robust capital, reserve requirements, and oversight, stablecoin issuers could trigger liquidity crisis and expose users to even more risk. But will the Genius Act be amended? Well, pursuing self-interest at the expense of the greater good is essentially taken for granted in Washington. In this regard, powerful and conflicting influences in the policymaking process can dilute legislation and regulation, leading to a policy gridlock, yielding compromises that would most likely please neither side, only to create further market uncertainty. Jake Chervinsky, chief legal officer of Variant, stated, the banks demanded the exclusion of yield-bearing stablecoins in the Genius Act. Now they're upset that that language they asked for doesn't screw over stablecoin holders hard enough. Sorry you guys did a bad job negotiating your regulatory moat, Try lobbying better next. All right, guys, let's take a look at XRP. Now, a couple of days ago, we were actually very optimistic about the pump starting to happen. Unfortunately, we rejected to break above the 10 exponential moving average right here with a closed body candle. Now, what you're seeing for the first time since we broke to the upside all the way back at the beginning of July, which was right here, we have now broken back under our Wolfpack long-term momentum indicator. We have just flashed a red signal as of today. Now, hopefully, this is just a quick dip and rip to the upside. However, last time we lost this was back here, May 28th, and we ended up going from $2.30 all the way down to $1.91. So as we continue to watch the momentum, which is important, our short-term momentums have reset back to zero. So that's actually positive news. We could see a move back to the upside.